Good evening. This is the Elliott wave update for the S&P 500 and the Nasdaq 100 for Tuesday, October the 4th, 2022. The rally continued across the board, very strong in the Dow, and actually very strong also across the board. The dollar did drop today as the sellers moved in. Gold rallied strongly, as did the 6E, the 6B, the British pound, the euro, et cetera, et cetera. So it is a normal thing that happens within the markets that when we move and push hard enough in one direction, we get a little bit of a springboard and everybody comes running back in. The difference to me between the last 20 years, let's say, is that we have so much more involvement from an outer ring, so to speak. So we have the financial media and we have 24/7 coverage of things that they run into the ground, so to speak. And a lot of people watch financial media all day long because they're looking for a particular clue that's going to give them an idea. It's like, we're going to pop, we're going to drop, we're going to do whatever, and that's fine. But what it's bringing about is trying to give 10 billion reasons why the market should go up and why it should go up big. And there's just a lot going on. But what I want to kind of address is that it's now been brought back to me several times by folks that are coming in and watching the videos and have been following what I've been putting up for a while. And they have great questions. And by the way, thank you very, very much. I really enjoy the questions. And so I like it kind of if it makes me dig a little bit deeper into my own counts and my own presentations. And so thank you. Now, getting into it, what people are asking me is about the possibility, and really I think it's more the probability that this primary B wave is actually still in force. And I've looked at it and I've looked at it and I've looked at it, and I keep coming back to the overlap here. And what I mean by that is that when the third wave was going down, as it is labeled right now, it did break below the June lows, which just happened to also be the completion point for primary wave A. So that's why we're now in a primary wave C, because we felt that at the time, and the count allowed, that primary wave B could have ended here. But in another case that now actually does still carry some merit. And that's what I'm going to talk about right now. And that is the fact, what if this primary B wave is still in process? So this all comes down a degree. So this, our minute degree. This would be minor degree. And we would just be finishing, actually on an intermediate degree, we would be finishing intermediate wave A. And so this would be a minor wave 5. So these stay the same and that stays the same, but this moves. This turns into an A. And so on the minor, it becomes a C for this wave, and these do become minute. So it's minute 1, 2, 3, 4, 5, a minute wave, a minor wave C with an intermediate wave A. This becomes minor A, this becomes minor B, etc. on the way up, and the B moves over. This turns into an ABC. This launch scoots up the probability a little bit. The intensity of the launch has already brought the market just here, right towards actually just above, I believe. And let me just take a peek. If we're considering this an intermediate wave 4, then what we're going to be looking at is the possibility that intermediate wave 3 is complete. So I'm going to go here and run it down to there. And yes, 382, which is the most often level that a market will get to put in a fourth wave. We're there. And it doesn't look like it's over. If it is, I'd be surprised if it didn't come down in a little bit of a pullback and then continue to rally. But many things in terms of how things trade and how they build and what they produce, that actually is changing a little bit. And again, part of it would be is that to get this B moved over, and this then would have to be an irregular intermediate degree B wave, not an intermediate third, but an intermediate B. So the A, B, C to form intermediate wave B. So this, all the minors, we go back to minor. This would be minor A, minor B, minor C. So these fives turn into minutes. And then we have in the minor degree a C wave, and in the intermediate degree, a B wave. So I know it's switching letters around, but here's the underlying current of what it suggests. That this rally is going to continue and eventually break above 43.21. That's what it suggests. So there are calls for stronger rallies right now as well. There are calls that the Fed's going to start to ease. That part I don't see. So I'm not sure where we're going to get the relief to continue to push the market. But it does happen, and it's happened here, and it happened here. And so, and my original count here was that this was intermediate wave A, and we were in an intermediate B wave. And I think it was collectively other members of the channel, their suggestions, and I'll tell you, this slide and this slide brought me pretty much straightforward to say, yes, we're dropping in the primary C wave. That is still how I am counting it. Now, what's going to change that picture, right? If we're saying that this is going to be intermediate wave B to complete what part intermediate wave B of primary wave B, and what we have left is a C wave rally. This whole primary wave B is in and of itself counter trend. The trend is down, it's rallying. Even this was the counter trend part of this little bit larger counter trend in and of itself, corrective move. But what it also says, if this is the case, and this goes for both the Nasdaq and the S&P here, that what again still is out there to come, and it may happen very quickly, folks. This is the other part. We can put these moves in very, very quickly, and then suddenly reality sets back in. So you've now witnessed in 2 days that, and it actually includes the Globex session that created this low on yesterday. It was Globex, so it's before the US started. So in 2 days, we've gone from 35.71 to 38.08. So it's a big, big rally. And the S&P today was up 113. These are strong rallies. This is a lot of money being pushed back in to equities. It was across the board. Equities, gold, certain currencies. It was coming out of the dollar, and that just made everybody very happy. So all of these sellers of dollars, the people that buy in the dollars, they go put them somewhere, and they stuck it back in the market, or they stuck it back into gold, or they stuck it somewhere else. And that may prove to be the right move, or may not. I don't know. But as far as the markets go, here is our situation as it stands. This still does have some merit. I can't say no. And it's not, I'm not being wishy-washy, I'm not being anything, because I'll tell you the truth. When you become a trader and you're looking at this market, you depend on what kind of trader you are. You must and look at all the factors. We are in a transitory period on a very big scale. The country's still being plagued by nonsense, by a lot of stuff, and the economy is under threat. There's no doubt. And it's not this person or that person or this administration or that administration. It's a cumulative effect. It's everything that came together and basically, you could say, created the perfect storm, and bingo, this is what we get. Now, we just need to accept that this is what's happening, because the underlying tone here, folks, is that it's extremely tradable. Extremely tradable. So what in effect really does need to happen right now? We need to rid our minds of all the external noise. And I'm going to emphasize that noise that comes in and just breaks down everything, and then we don't see what's happening. And then you're looking for the why and the who and the what. It's like whatever people are going to think, it's going to be reflected in the prices. And these are the times I will say we trade more technically. But the technical picture can change, because reality is sitting there with a very serious problem. They're trying to toss out there and let you know, it's like saying that the Fed's going to ease. The Fed's going to ease. They're going to back off from raising rates. It's like, oh, are you nuts? Are you kidding me? As I walk out and try to fill the tank of the car with gas, which here in San Francisco is now $6. $6 a gallon. Oh, we got this factor, that factor, this factor. Bottom line, it's $6 a gallon. Inflation is still real on a consumer level. So what do I want to do with that news? Put it where it belongs. Until you see concrete evidence, a hope and a whim and a prayer is going to cost you money. Now, to just sit and trade, it doesn't. I mean, it may, don't get me wrong. But we're following some basic rules and guidelines to form a wave count that's going to fit with what truly is going on overall. Daily chart allows for this rally. I could not begin to tell you why, because in my life, the underlying core has not changed. The underlying core reasons that are going to affect the dollar, that are going to affect the markets, that are going to affect corporate, that are going to affect consumers. It's like it isn't singling anybody out. It affects us all. And everybody's going to have to make adjustments. And a lot of the stuff that gets bickered about and talked about and pointing fingers, you can continue to do it, but in the meantime, reality is still functioning. Now, back to this. I'm sorry. This is kind of what I wanted to present yesterday, so I probably should have just labeled this whole thing another Eye of the Storm podcast. Back to the S&P. If indeed this primary B wave still has a nice solid C wave rally to put in, we're going to get additional confirmation from it as it cruises up past the daily 20 and then 50% Fibonacci resistance at 38.73, and then right above it, we got wave one. And right now, wave one, and I'm going to use that a little bit of the extension because that's how we labeled this, 38.83. If this is a fourth wave, it cannot cross over wave one at 38.83. That's going to be check one, that it's a much larger C wave going up. Now, you could stop and go look for reasons to back up why you're going to put on a trade. Meanwhile, that trade's happened and it made $1,000 and everybody's on to the next trade, which may be a sell. So anyway, don't worry about what and who and why. You can read about it later. You can look at it later. You'll be able to filter it through later. But right now, that's what's happening in front of you. And many times we're trying to look at what I need to put it on and keep it. Okay, if you're that type of trader, then you're going to get yourself caught up in looking for a reason why, and the trade will have happened, and then a whole bunch of other stuff will come in. So if we just try to stick to what's actually happening in front of us, you go in, you pull out a $200, $300, $400, $500. Thank you very much. You come back. Oh, there's another trade. You go back in, you do it again. Many, 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 many days where that is made available, but you have to focus and you have to pay attention. And you just have to go with it. During the day, when they're pushing the buttons, it's algorithmic controlled and it is quantitative. Now, so therefore, these counts can change. None of this is ever going to be cast in stone. What I've already done, yeah, it would be really hard for me to go back and start changing everything that we've done up to this point. But here, this can change and this could go. And there are, I will show you. These kind of fit, but I would rather use, if indeed it is a C wave now going up, I'm going to remove that. And we are going to put in extensions. So we would go bing, bing, bing. We're going to the top of the A to the bottom of the B. Here you go. There's your levels. If this is a C wave, we're walking over that count right now. I am not saying this is what is enforced. I'm giving it out there because of what we have now witnessed over the last 2 days. It's time to talk about it. You're not going to be caught off guard. I'm not saying it's going to happen, but you will know what's in play if it suddenly breaks to the top side of 38, that 3,800 handle. If it gets to the top side of that and heading for 39, it's not a fourth wave. And it's not a fourth wave here. And this is going to likely be complete as an ABC, and it's going to push. That will be, and you can trade to it instead of trying to trade against it because of not understanding. And trying to hook up with reasons coming in from financial media, please don't. It's only going to create confusion because you're going to be thrown to watching something else and looking at something else. Everything filters through to each other, in all honesty. And it's another algorithm firing. And then it's like, that's what goes on. Anyway, now, if it's truly just a wave, intermediate wave 4. Okay, so we got that, right? Let's mark these down. 100% wave C to wave A brings us up to 4260. Yeah, it could, but I'm looking for more. I'm looking for more. And that's because of the irregular nature of that B wave. I don't and haven't found anything that specifically says it can't happen. So I'm going to allow it in this particular case, but the market would need to follow through, of course. So again, we're really looking for 0.382. That fell almost to the 0.382, so it should rally to the same. I mean, it could go as high as 618. Now, that's pretty strong in the face of what truly, folks, the United States, the European Union, and the rest of the globe are confronting. So here, very possible. Just has to break that. That would kind of suit the bill. So we can say back to 43. That's 27, 43, 33, sure. As long as we can do 5 waves and it looks complete, sure. And something, again, I think would kick it lower. This is all going to be false narrative, but we'd still, and if it isn't, God bless it. All right? We all could use some good news. So that's what it's going to take. All right, so I'm going to get rid of that. And we're going to go back, go down to the hourly and talk about what is going on, what we're seeing intraday. So let me try to open this up a little bit. Bingity bing. It's pretty impressive. Right now, this is left. That's the 5. There they sit. And the 3. And this is very impulsive. Didn't actually start that way. So I'm not sure because this is all very quick and these are hours. So 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5, a 3, 4, 5. So we're finishing a 5-wave structure up. Okay, what is that? Is that an A wave? Is it one of an A wave? Is it one of C? So here's our choices. It's either wave A of this minor 4, excuse me, of this intermediate 4. And we're going to come down back to here or even deeper, because the rally back up, we got to still stay under 38.83. Not a whole lot of room, considering it rallied 100 points today, and I believe 80 or something yesterday. So above 38.80, boom, it's not going to be serious downside right now. We got more serious upside to do. And I'm not wishy-washy, and neither is Elliott Wave. This is what the market is doing. And it's like, if you think that there's one particular indicator or one particular person or one particular idea that captures all that thought that went into this rolling of panic around the globe of getting long again, just buy it, just buy it, just buy it. Well, everybody's searching for something. And for example, I did get asked, and I suppose it's legit, particularly if you live in Europe, the whole debacle going on with Credit Suisse, that you got the management of Credit Suisse saying, hey, we're fine. We've got $8.3 trillion in-house, blah, 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 and positions of this, et cetera, et cetera. So we're good. But meanwhile, there's a mass exit that the stock is plummeting, et cetera, et cetera. So somebody was asking, would the Fed pivot to help a bailout of Credit Suisse? And it's like, no, it's not an American bank. It's a Swiss bank. We have offices here, but Bank of America has offices over in Zurich. And so does JP Morgan, and so does Goldman Sachs and everybody else and their grandmother. They're well represented all over Europe. So no, it would be a problem. In my take, it would be a problem for the Swiss government and the Swiss central bank and what they do. And I don't know what they'll do. But how it would affect, I think it would have a ripple effect against all markets because of the size of Credit Suisse and their presence, their global presence. And we've seen, and the last time we saw it, of course, again, was 2008. And there's a lot of things coming about, talking about that Credit Suisse has similar positions that the mortgage tranches produced in 2008. Again, I don't know of any involvement of U.S. banks, but that's where it has to be based here in the U.S., I think, to really have a much more stronger negative effect on our own market. Now, looking at this chart, what can we say? I can say 5 up. And that would suggest that we likely should get a pullback here. Yep, that's not going to work. I'm going to change it and change that. We could get a pullback here. And if that's the case, I'm just going to take it up to the current high and say we started from there. But just to get an idea, 382, 50%, 37.20, 36.90, maybe as low as 36.62. Look what we got balancing it out. We got the 20 up at 236 right now as it stands. There's the low, there's the high. 37.52, 37.20, 36.90. But so if we can kind of come down, I'd love to see it come all the way down to 641 and then put another leg up. That keeps it in that intermediate 4 category. Again, 38.80 remains a please don't go over that zone because it changes the count. It changes that picture. Okay, so that would be one. If this all is it, I'm not sure how, but let's say it was, and they just start dropping it, it can come all the way back and equal the low. So we'd have to see things drop strongly before you're switching back around and looking for a much larger drop and not a rally, decline, rally, zigzag type of a move. If it just comes flying straight back down, I'm going to tell you it's likely news driven. Something has occurred that is majorly negative for equity, for the dollar, for interest rates, for something. All right. I am going to leave it there. What we now, I hope have a little bit clearer picture about that alternate view, which never went away. I just put it on the shelf. I watch it, but now people are being asked about it, and here we're going to bring it back. We have all that worked out. Magic number right now is 3880. We're looking there. It has to move above it. Don't go give it a little kiss and then run south. Go above it with some strength, as it should, for whatever reason they're making. It could happen. All right, let's quick go over to the Nasdaq. And sorry, I know this one's going to be a little bit longer, but so be it. We got a lot of stuff up there. Let me start taking this off, and we shall take a look at first the daily chart. So once again, we're in that same scenario. Right now, this is primary A. Here's primary B. We're in a primary C wave decline, of which we've done maybe 1, 2, and 3. Now, same discussion. That primary wave B is still in process. That moves that out of the way. And this becomes intermediate wave A. And we're in a intermediate B wave decline, which looks to have completed at Globex low Sunday to Monday at 10,870. 10,890, excuse me. And now we're launching. Now, if that gets marked intermediate wave B, then we're in an intermediate C wave. Intermediate C wave consists of 5 waves of minor degree. That's just the structure. That's just what the structure has. I'm not saying that's what's playing out. So that rally would then be expected to bring the market back above 13,000. This is actually 740. 13,741. Right? Yeah. And a little bit more. And pretty quick. And that's going to really throw a lot of people, as we already discussed. So that would be the project. Where wave 1 comes in is 11,913. So we get a little bit more room in the Nasdaq than you do in the S&P. Next up on the way up would be the daily, 20. And you can see the moving averages. Yes, the daily 4 and the daily 8. 8's flat, the 4's peaked, is turned. The 20 going flat, the 50's going, well, okay. So they slow their descent. Right. And so, and even the 200s are arcing a little bit more, right? Sloping, but still with a downward slope, a downward direction. So on a daily, I'm going to go over to the hourly, and it's going to look pretty much the same as that S&P. They're very related. So 4 and the 5s are the end of 3, and then we got the same thing. This could be all 1, and this could be 2, or 1, 2, and 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5 of 3. So is this a 4, and then we got a 5, and then we complete a larger 5? If I think I'm correct, let's do it again. 1, 2, and then we have 1, 2, 3, 4, 5 of 3. 4, 1, 2, 3, 4, 5 of 3. Or maybe 1 more. So maybe we get up to 11,700, or maybe we actually do hit that. There is Fibonacci resistance at 11,690. So maybe that does actually come into play. We got up to 11,619 today. So a little bit higher up, and then maybe that'll be done. And then with 5 up, we're looking for that decline back. And here we are sitting with the moving averages likely being the culprits to contain a corrective phase. And we turn and we start to come down. We have 618 at 11,190. That would be really great, because again, that rally that keeps it in that intermediate 4. But if it's 1 and then we're dropping in a 2, could do the same thing, but then you're looking for something much, much, much stronger. And in this case, actually, they both could look the same. But again, we have topside resistance that would change the picture. But for tomorrow, I think we are kind of getting into overbought. You get your RSI's red, and it's lashing at you saying, come on. So, but that doesn't stop them. And we continue just to see new cash coming in. It's the start of the quarter. So there's just a lot of deposits being made, positions being reestablished, looking at what's going to happen now at the new quarter. So I think we're a little bit up, but it does appear to me that we need to do a pullback. And here's our support: 11,489, 11,375, 11,282, 11,190. That could come down further and not break any rules and still rally. If indeed this completed whatever, then it needs to break solidly below 10,890. Solidly, has to break solidly below, and it has to get there quickly and change the mind of all these moving averages and turn them around as well. Can it happen? Sure. There's enough going on. I've already spent enough time. So I'm going to wrap it up right there. Both indexes can carry both views. We've now gone over in a little bit more detail. Thank you very much for listening. Our next update will be on Wednesday, October the 5th.